Hello, everyone, and welcome to Why Did I Short series. Unleash your trading instinct. We're looking at Apple, nvidia, and MRNA, and we're doing a short series on these because their market's at all-time highs, and they're giving us these shorting opportunities. Obviously, the market is in a bullish trend, but if you're looking to scrape some pennies off the floor and trying to be a technical trader, definitely watch this video. It's for you, and you'll learn on how we use breakdown candles for our trading strategies. Before we get into the charts, let's take a look at our guidelines. We look for stocks that are making all-time highs and then are making a pivot. And we identify those pivots through the time frames: 5-minute, 10-minute, 15-minute, 1-hour charts. We look at these time frames along with like gap downs and breakdown candles, and we use those specific setups as a guidepost or guideline, something to trade against to manage our risk, which is always 0.5 to 1.5%. This is not financial advice. This is educational and entertainment purposes. I'm just giving you an inside look on how I pull profits from the market on a regular basis. So let's, this is intraday. This is live. So I usually do my videos after hours, but I thought that I can do this intraday and just show you what it looks like while it's happening. So we have nvidia on the docket, and I talked about this in our last video. We did a day trade because it did a breakdown candle below support. It fell. It gave you the deal. We got out. You could have got out anywhere here for a profit, which was amazing. And I said that will most likely continue tomorrow, and the confirmation is here. And again, you have a breakdown candle, right? This is 15-minute chart is what I have it on. This is what I mostly use, but I can go on 5-minute too, right? If you want to be a little quick, but I always like the 15 works really well. And then for my stop losses, I'll flip it to the 1 hour just to see, okay, well, is it, above that limit that I set myself for, right? So let's go back to the 15-minute chart, and let's get rid of these lines. You have your breakdown candle. This would have been your entry. So anywhere here, anywhere in this area would have been your entry, right? 198 if you want to be conservative, and you already have, hopefully maybe you got 199, maybe 198.50, 198.30. But after this close is your signal, so you can look at shorting it right away, or it retrace a bit above the candle. It's something that you need to look at and get a feel for and practice on a regular basis. But this would be your signal to short, and then this is your short. If we start closing above this candle on a 5-minute, 15-minute, an hourly basis, that's a no-no, and we just exit our position, right? That's a no-no because we want to see continuation. And we have confidence because we have a bear flag pattern here, and you see it just continued down, and now we're done. This is a trade that's done. We have our 1%. This trade is done. We have more than $2 gains on nvidia. Good to go. Our day's done in the morning. We like to get it done before noon. Let's take a look at Apple, right? Similar scenario here. However, it's a little inverted. So you do have your breakdown candle. You could see this two ways. Yes, you could short, somewhere around here because you have a breakdown-ish candle here. Not entirely, but we didn't do that, right? Because there was a gap here. So what we did instead is we bought it this morning here, at 145.60. And we're looking for a bounce. We're looking for a bounce back up to this line or this line. And if we close below this line, we're just going to get out. So we're actually just risking about like 30-40 cents, right? 30 to 40 cent risk. Not bad. That's like 0.5% or less even. So the risk is very small. We took on this trade. These are not the best trades. We'll see. I think it'll just go sideways and maybe peter out. But we'll see. If we get a bounce and we're in that 46 area, we're going to take 146 area. We're going to take that 50-cent profit, right? We're just going to take it and run because this is, for me, I think this is kind of like a bearish thing, lower highs. And that's what's going on Apple. Let's go back to Apple. So what didn't inspire me to short it was that it gapped up. So and I wanted to fill the gap here, but you can see we're this, and I already know ahead of time that it's probably going to be a loss, and I'm okay with it. But you got to take the trades. You got to take the trades because, like you see here, this is the better setup where it comes down first into the number and then it takes off versus taking off and then coming into the number. That's it's a different setup, and you need to identify how they differentiate from each other. So if we start closing, look, we're already starting in here. So in the next maybe 11:30, which is the next hourly close. Hourly close will be at 11:30. So 11:30, I'll take a look. If we're below this line, I'm just going to get out. That's it. And finally, Moderna. We were short that yesterday too. And again, a continuation. Very, very strong move. And here you have, again, test that. See, this is the opposite of that good setup on Apple where you actually had a move higher right first, and then you had a continuation downward. So strength into filling this gap area, that white space that was created this morning. And then you have the breakdown candle. So Moderna, you have to look at your stocks. Some move more than others, and if that's can make people uncomfortable because the risk is higher, but the rewards are also higher. So you had your breakdown candle, right? And you had your bounce. So 130 could have 129, 128 could have been where you shorted. Your risk is, it's a lot, right? You're looking 158. It's about $20 risk, but you're already up $30 on this trade, right? So absolutely phenomenal trade. And that's what you want to look for. Follow me on Patreon if you want to learn this gap and this gap trading and short selling strategy. We'll go step by step and how to mitigate your risk. And so far, all of these trades that we've done this morning have won. Why? Because they're coming off of all-time highs. And then after doing that, you see breakdown candles and failures and then pull back. And I said, look at my last video. I said, we're going to be coming down here. I guarantee we're going to be coming down here at 411 when I don't know. And here we are the next day, and we're here. So I'm going to link the other video in this one so you can see. But definitely worth following. Definitely some money to be made. Trading if you have the proper framework. If you're not using leverage, there are so many rules. It's a technical profession. Definitely not for amateurs because it is high risk. If you're new to investing, you definitely want to buy and hold good quality, valuable, profitable companies. Okay. Thank you for watching. See you tomorrow.